Good evening. This is the Post-Market Recap by AGI Era. Today is Tuesday, January 20th, 2026, and it is shortly after 4:30 p.m. Eastern Time. The closing bell has rung, and we have a lot to unpack from today's session, which saw a decisive victory for the bears. The U.S. session has officially wrapped, and the price action suggests a broad-based retreat across major indices. The S&P 500 finished the day down 2.6%, settling at 6,796.86. Technically, the index is now trading significantly below its previous close of 6940.01, breaching the psychological 6800 level with conviction. This marks a notable technical breakdown, suggesting further downside could be in play if this level isn't quickly reclaimed. The Nasdaq 100 mirrored this weakness, closing 2.2% lower at 249.56-ish. The tech-heavy index struggled to find any footing, reflecting a broader risk-off sentiment. The Dow Jones Industrial Average finished lower by 874 points, or 1.76%, closing at 4488.59. Crucially, trading volume today was elevated, particularly on the sell side. This implies that this move is not merely a light profit-taking session, but rather a more significant institutional liquidation of positions, lending considerable conviction to today's downward trajectory. Market breadth and sentiment. Under the surface, the fear gauge, or VIX, while not available with an exact print at this moment, likely saw an uptick given the significant market sell-off. A rising VIX, even if subdued relative to the magnitude of the market drop, would suggest increasing investor apprehension rather than outright panic, indicating a controlled, albeit sharp, rotation. We are seeing a clear divergence in sector performance. Money flowed noticeably out of technology XLK, which lagged significantly with a 2.58% drop, while utilities, XLU, a traditional defensive sector, also saw declines but was relatively less impacted, falling 1.04%. The spread between these two sectors today tells us that investors are favoring safety and rotating away from growth and riskier assets in the face of current uncertainties. The macro engine room. The primary driver of today's moves can be traced back to the currency markets and geopolitical concerns. The 10-year Treasury Yield, while an exact closing print isn't immediately available, the broader market narrative suggests that the bond market is reacting to the same forces impacting the dollar. This move is significant because the U.S. dollar index is down 0.83%, settling at 98.38. The dollar's weakness is largely attributed to escalating Greenland tensions and renewed Trump's tariff threats, as highlighted in today's market narrative news. A weakening dollar, while potentially beneficial for multinational corporations, overseas earnings signals heightened global uncertainty and a potential shift in international trade dynamics, which can create headwinds for risk assets. Meanwhile, crude oil is trading around $59.40, showing a slight 0.08% gain on the day, likely responding to the same geopolitical undercurrents that are influencing currency markets. The AI and Tech Monitor. Turning to the leaders of this market, artificial intelligence and big tech. This group bore the brunt of today's sell-off. NVIDIA finished the day down 4.30% at 178.20. Microsoft closed lower by 1%, while Apple saw a significant 3.45% decline. Other Magnificent Seven stocks also experienced notable drops. Alphabet, Google, was down 2.43%. Amazon fell 3.34%. Meta declined 2.51%, Tesla plunged 4.17%. The widespread weakness in this group is notable because it suggests that investors are taking profits from the market's recent leaders, indicating a broader de-risking across portfolios rather than isolated company-specific issues. This could be a reaction to the macro environment, particularly the dollar's instability, and a potential reevaluation of growth prospects. After hours and look ahead. Looking at the after-hours tape right now, shares of Walmart, WMT, are showing a slight positive movement up 50 hours, indicating that investors might be seeking refuge in defensive consumer staple names following today's broad market decline. As we pivot to tomorrow, the economic calendar brings us several key international data points. Investors should specifically watch for the German 2026 GDP growth forecast cut and the German investor morale data. These European economic indicators could provide further insights into global growth trajectories and influence market sentiment, especially given the current geopolitical backdrop impacting the dollar. That is your comprehensive closing update. We will see you tomorrow morning for the overnight brief. Disclaimer: this podcast is not financial advice. Data may be delayed or inaccurate. Always conduct your own due diligence.